Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick. Welcome to the Trader's Outlook for the week of February 27th. This week, I'm going to be focused on the S&P 500, corn, and natural gas. With that said, let's get into the charts. This presentation is for educational purposes only. As usual, I'm going to start off with the S&P 500. If you've been following me for the last few weeks, you know that I called that the area of resistance for the S&P 500 was around 4,200, not the 4,100 that many of the charts were showing if you follow the SPY ETF. And as I predicted, we hit up against 4,200 and we failed to break out. And now, in my opinion, we're in the midst of a healthy pullback and correction in what could very possibly be the start of a next bull market. So why do I feel this way? Well, here's the Williams Progo, and it's showing clearly that the big money traders have been getting out of the market here for about a week and are now below the area where I like to see for bullish signs in the market. So we'll need to see a turn up in the large funds purchasing of the S&P 500 to really put a bottom in this pullback. In addition to that, we have the seasonal pattern in the S&P 500 calls for a pullback right here, right now, and it looks like we started it last week. I fully expect this to continue through March, and then at the beginning of April, we have some very powerful seasonal trends and trades that I think will help in addition to earnings starting to come out in the beginning of April, and that might give us our next leg higher. So what is my plan for the next 1 to 2 weeks as a short-term trader? I'm going to be looking for the S&P 500 to rally back above into the overbought area based on Williams %R, and then that's when I'll be interested in taking some short-term trades. Not looking to get into it right now, but if we do get a rally, I think rallies are set up to be sold, not purchased in the S&P 500 for the next 2 to 4 weeks. Now let's jump into the corn chart. Taking a look at corn, corn has been basically in a trading range since it had its move up with the premium that was put in with the war in Ukraine. And we've been in this range for basically a year now. And I know I'm here talking about technicals, but when it comes to commodities, we have to take a look at some of the fundamentals as well. And we have conflicting fundamentals going on with corn right now. We have looks like a good strong supply in the US, but South America is having negative weather impacts, which are going to cause their crop to be smaller than expected. But the U.S. farmers looks like we have enough supply to pick up that demand. And with the dollar increasing, corn price is going to go down with that. So as you see here, we've been in a area of undervaluation, but now with the recent increase in the dollar, we're about to hit undervalued in all three indicators of corn. This doesn't happen overnight where the market moves, but you can see the last time this happened back here, it was a great buying opportunity. Right now, what we see coming up is this December low is going to be our next area of resistance. If we don't hold this and bounce, I think it's very possible corn could head back down into these levels. That'd be a very large move. Right now, I don't think we can get there, but there is some long liquidation going on. COT report hasn't been available for over 4 weeks because of a ransomware attack on one of the data providers. So I can't get a good look into what the commercials are doing right now. But my first area this week is going to be looking for this area of resistance to be held, and then we can possibly get an oversold bounce from there. But in addition to that, let's take a look at some of the other things that are going on. Seasonals are very important in the commodity markets because it's a very real process when we're talking about crops. And right here, right now, as you can see here, we are supposed to start a rally. But we've kind of been in, as I mentioned, this consolidation area for a year in corn. So we should continue to move higher. You can see here, we might have a little flattening out period here, which would align with what we're seeing in the market right now. Probably you can tell right now is I'm having trouble getting really bullish or bearish on corn right now. And one of those reasons is we have conflicting fundamentals. And even with this pullback, we see the front month premium has continued and even increased on Friday in this huge decline. What this means is people who actually want to have corn on this contract that's expiring in May are out there buying, and they're paying more to get corn in May than they can pay to get it in July. That's a very bullish indicator, and I'll be watching this week to see if we can continue to have a decline while this premium increases. That will allow me to get very bullish this week on corn. So that's my outlook on corn for this week. Next up, let's take a look at one that I've had a lot of questions about, and that is natural gas. Okay, and our last charts of the day are on natural gas. I'm going to start off with the Williams valuation indicators. This has shown natural gas is undervalued since starting back in September. So not really helpful for me to say that it's currently undervalued, but it's one of those things to highlight why we don't trade off of one indicator alone. But we do have multiple indicators finally lining up to call what I think is going to be the bottom in natural gas. So clearly undervalued with it starting to move up. If we look at the daily seasonal indicator, you can see seasonal's called for a decline this whole period of time in natural gas, and now it's time for us to call the bottom and start moving higher. This also coincides with the front month natural gas contract expired last Friday. So we've now moved into the April contract, and the users of natural gas are going to start buying contracts for their future needs going into April and May. If you look at the premium spread across the contract, we're already trading 20% higher in some of the further out contracts. So the market's also indicating that we've had a really nasty decline in natural gas, but everyone is expecting the price to be higher in the future, and I believe we're forming the bottom right here, right now. But what is the last piece that's making me confident that we might finally have the natural gas bottom? Well, that is the ADX indicator. I have a video in my Trader's Toolbox. Go check it out. But what I say in that video is when we cross above 40 in a downtrend in ADX, it usually indicates that the bottom is in or is being formed as we speak. And last week, we just peaked up above 40, which means, we could have a couple more weeks in this area. So don't go rushing out and buying natural gas. But we have ADX and the weekly to mark combo 13 aligning, which when those two are in alignment, it's a very good high probability that the bottom is in. And I believe we are forming the bottom in natural gas now. So use your systems out there to look for buy indicators. Don't just go running out, because we could still decline for a few more days or even weeks. But I will be personally looking for and taking buy signals in natural gas. Thanks for watching Just Some Guy Trading with Kevin McCormick. If you're enjoying my content, please like and subscribe. We'll have more great content coming out over the next few weeks.